Hello, folks. Welcome again to our next lessons for our analysis for 4-hour time frame. There are some of the things that you need to understand whenever we do the analysis for higher time frames, and each time frame has a pair of time frame that correlates with that time frame. So whatever direction or momentum that you see on the time frame that you analyze, you have to look at your daily time frame and see if what you see on the 4-hour time frame, on the 15 minutes time frame, is exactly what you see currently now. So each time when the price gives us a swing high and a swing low, I always tell you guys that you should know that each high and low, the price leaves a liquidity. On this high here, the price gave us liquidity. On this low here, the price left liquidity. On this internal structure, which is our low high, the price left liquidity. So each time when you see the price making a swing high and a swing low, this should tell you that in an internal structure of your main swing high and your main swing low, there is always the liquidity that drives the market on the current situation. Now, the reason why most of the time we look at the candles or the higher time frame is because we want to identify the direction of the market. So in most cases, we have to identify the resistance of the higher time frames before we can go to any time frame again. Let's look at our higher time frames. This is our 4-hour time frame that we are analyzing today. So on the 4-hour time frame, our price gave us a high. Okay, that's the high that our price gave us, and this lows that you see right here. So our main focus are going to be on the swing highs, the swing lows we have that the market has given us for today. Now, on the premium zone of this price, we see our market having demand zones on the discount zone. I've told you guys about how you identify your premium and your discount. So when you look in the zone, the price gave us something that you all have to identify. We can do all things in the market, but with the structures that we have, we cannot avoid what we see on the price. Our internal structures, our support and resistance, our demand and supply. So those are the things that we need to see and look at in the market before we can take any move. See, when the market makes some sort of indecision market on this candle here, you can see that the market was indecisive down here and also up here on your 4-hour time frame. So this candle was a breakout from the structure that we see there. It was a breakout. Our resistance on our 4-hour time frame was based on this area where the market was giving us the closing and opening. Okay, this was our resistance area. Confirmation, the first confirmation that we had for our price that we will sell. When we zoom in the price, there's something that you have to see and look at as a trader. If you have identified your resistance, your support and resistance in the market, you have to look at the price, where the price or what the price was giving you currently. The market gave us this demand. This was our demand the market have given us. So we were certainly sure that the market was going to push and give us a buy above our resistance line. That is to say, if Nasdaq 100 was to buy on the position that is on right now, we would have seen Nasdaq not consolidating like the way it is right now. Our Nasdaq is giving us a consolidation structure because when you look on the zone here of resistance, the market broke out the resistance to that zone. And the sellers, since they came into the zone right here, they closed below our area of resistance. See, our sellers sold from this area to this zone. So that zone gave us a sell from this area to this area. From that high and that low, we had sellers in the market. What am I trying to say? In most cases, we look at this structure as in like, if you understand what a support and resistance is, in most times, those who try support and resistance, they can find that entry right on that position because they wait for another confluence because the market currently was giving you a consolidation on this zone right here. The market was giving you a consolidation. Now, when you look below the consolidation structure, you will see the market broke out from this zone. Remember, ever since the buyers came into the zone, since the market gave us a bullish trend from this zone, this previous candle has never been retested. There's something that you guys need to understand about identifying a fair value gap. Since the market also broke out from our demand zone, this zone here, okay, there's something that you guys also have to know and see what is happening on our 4-hour time frame. Because we had a break of structure on this area, so the market broke out from here. Okay, we see the market breaking out from here on Nasdaq, and then we don't see that area being retested. This is our 4-hour time frame. Looking at our price action, we also have this candle here, which was our previous break of structure also on that candle, okay, which gives us an order block, all right, which gives us an order block. So it aligns with this candle that we see right here, which means that the price was giving us liquidity. It was creating a liquidity right there that we have to break up. So that liquidity now gives us the zone of area, which is, if we were taking out that liquidity, then we have this whole fair value gap that we should be looking at into our 4-hour time frame. In most cases, when you deal with such time frames and you identify your fair value gap, you have to now understand what you are looking for into the market. You have to know what you're looking for into the market, because there are things that in the market we look for, things that drives the market, and things that really don't matter for now. So in these things, we look at areas like this, and we try to analyze the market in this kind of sense. So we have identified our order block, which is this zone here, which is our breaker block. So our breaker block is on this zone above our demand zone. So these are the things that in most cases, when you look at them, you ask yourself, will the market sell to that zone? Market buy from that zone. You know very well that the market will sell all the way from this resistance area to this breaker block and begins to buy to that zone to take out that liquidity. So now when you refine your price on your 4-hour time frame, going to your 1-hour time frame, this is what you should see. The consolidation that we talked about on the 4-hour time frame, there is the consolidation that we talked about on the 4-hour time frame. The fair value gap that we talked about on the 4-hour time frame, there is the fair value gap that we talked about on the 1-hour time frame. When you still go back again to refine this price to your 30 minutes time frame, this is what you see. The consolidation that we talked about on the 4-hour time frame, this is the same consolidation that we are talking about on the 30 minutes time frame. So this is how you analyze your 4-hour time frame, so that you may know the direction of the price. So your Nasdaq will be bearish to that zone. All right, it will be bearish at our at that BR right there. Then we can take our buyers from that zone to take out that liquidity. So I think, and I hope you enjoyed, guys, this short video. Until we meet again, thank you.